Good morning. Hello to everyone. So, dear colleagues, first of all, I would like to thank you that you find time to arrange this nice conference and to try to help our future clients to find solutions for their problems in terms of international taxation. Today, during the conference, we'll try to answer as many questions we can. We'll try to present a few countries like Azerbaijan, Georgia, Kazakhstan, Moldova, and Mongolia during the next about 2 hours. We'll try to answer like many questions like what are the frequent treaty problems, what means permanent establishment, what is the concept of beneficial ownership in Kazakhstan. I will try to outline the main highlights about taxation in Moldova and how double tax treaties may impact companies and individuals. And if you have any questions, please feel free to send them in the chat. If I will like to explain in advance that if we don't have enough time to answer your questions, don't worry, we will follow up on every question you send to us via chat or via email. So then let's begin with the first speaker, Mr. Royal Ibrahim. He represents GRATA Azerbaijan. Please.
Hello, everyone. Thank you for joining us today. I hope our talks will be helpful for each participant of the conference. Now I am going to talk about rules of administration of double taxes in Azerbaijan. Just for your information, Azerbaijan has entered into double tax treaties with 55 countries.
Ibrahim, sorry for interrupting. Can you share your presentation on the screen?
So today we are going to talk about rules of administration of double tax treaties in Azerbaijan. Just for your information, Azerbaijan has entered into double tax treaties with 55 countries. Implementation mechanism of those double tax treaties in Azerbaijan is specifically regulated by the resolution of the Minister of Taxes approved on 12 June 2017. So the respective regulations provide 3 options for non-residents to avoid double taxation in Azerbaijan or benefit a lower tax rate. To benefit from provisions of double tax treaties, non-residents are required to follow some formalities. As you see in this slide, there are 3 DTA forms: DTA 3, DTA 4, and DTA 5. I will cover all required formalities for each of DTA form in next slides. The first option which is available under the respective regulation is DTA 3 form. DTA 3 form is submitted by non-resident if non-resident wish to benefit from advance exemption or a lower tax rate. Double tax treaties provide for some cases full exemption from withholding tax. For some incomes, for example, royalty dividend incomes provide a lower tax rate. So in order to enjoy such exemption or a lower tax rate, a non-resident is required to file the DTA 3 application form. DTA's application form can be submitted directly by the non-resident, or it is legal representative in Azerbaijan based on a POA. This application form is submitted to the tax authority with which the tax agent is registered. So tax agent means the person making the payment to a non-resident entity. The application form shall be submitted before the income is paid by the tax agent. It means if non-resident fails to submit the DTAC form until the income payment date, the local tax agent is obliged to calculate withholding tax as per rates provided under local legislation and remit it to state budget. So the application can be submitted in soft copy by using a tax portal. To use a tax portal, applicant needs special login password details provided by the tax authority or an electronic signature. The traditional way of submission is also possible, so the applicant can file application in hard copy by courier or in person. So certain supporting documents shall be attached to DTAC form. These documents can be contract between parties. Tax residence certificate is a must, and extra from state registry of non-resident, and power of attorney if the application form is submitted by legal representative, invoice, handover acts, payment orders, and etc. The exact list of the required documents depends on a particular type of transaction. General time frame of review of the application is 20 business days. So tax authority is obliged to review the application within 20 business days, and tax authority issues either an approval letter if all submitted documents are in compliance with the requirements of regulations and provisions of double tax treaty. In such a case, if the application is successful, tax authority issues approval letter in 2 copies. One copy is sent to the applicant, and the second copy is sent to tax agent. And if documents are not filed in compliance with the requirements, then tax authority issues a rejection letter. A copy of rejection letter is sent to the applicant only, and the applicant is entitled to reapply by eliminating the mistakes in the application form, or if the applicant does not agree with the decision of tax authority on the rejection, the applicant may appeal the decision to a higher authority within the tax service or to the competent court of Azerbaijan. So the second option available for non-residents under the DTT regulations is DTA4 application form. DTA4 application form is submitted for the purposes of confirmation of taxes paid in the Republic of Azerbaijan. So, for example, a non-resident entity failed to submit DTAC form, but tax agent applied withholding tax as per rates required under local legislation. So the non-resident is entitled to get confirmation from Azerbaijan tax authority about taxes paid in Azerbaijan. This is done for the purposes of obtaining tax credit in country of non-resident residency. So the procedure for DTA4 is almost the same for DTA3 application form. So the non-resident direct or through its legal representative can apply to the tax authority for the purpose of obtaining DTA for application form. Submission method remains the same as DTA3 form. Also, certain supporting documents shall be attached to DTA4 application form. The time frame for review of the application is the same, 20 business days. So, in case all documents submitted to the Minister of Taxes are in compliance with the regulations and the provisions of double tax treaty, tax authority issues an approval letter on paid taxes. So this approval letter includes information amount of taxes paid in Azerbaijan. In case DTA4 is not filled in correctly or not all supporting documents are attached to the application form, tax authority can issue a rejection letter. So copies of rejection letter or approval letter is sent to the applicant. So if in case applicant does not agree the decision of the tax authority, the applicant may appeal the decision to higher administrative authority or to the competent court. The third option available under the regulation is DTA5 application form. So DTA5 application form is submitted by non-resident for the purposes of refunding overpaid tax in Azerbaijan. So when happens such overpaid tax in practice, when, for example, when DTA3 form, as we discussed, DTA3 form is provided for the purposes of advanced tax exemption. For example, non-resident fails to submit DTA3 form or is not submitted in a timely manner. Timely manner means that the DTA3 form shall be submitted until the date of income. So if non-resident fails to submit the DTA3 application form until the income payment, or for any other reasons, if the tax paid by non-resident exceeds the rate specified in double tax treaty. So in such circumstances, non-resident can apply to tax authority through DTA5 application form to get or bad or paid tax in Azerbaijan. Time frame remains the same as for other application forms. Supporting documents also shall be attached to the application form. As a result of review of the application form, tax authority either issues a an approval letter or rejection letter. So in case all documents are submitted in compliance with regulations and the provisions of applicable double tax treaty, then tax authority issues a letter of opinion. Such letter of opinion then the tax authority sends to the local department of the Ministry of Finance, because Ministry of the Finance is responsible body to refund the overpaid taxes. So Ministry of Finance and overall process of refunding shall take up to 45 calendar days. This include also 20 business days stated above, but in practice this may take up to 3 months or more time. So the post-rejection steps remains the same. Applicant has right to reapply in case if applicant thinks that he has made mistakes while completing the application form, or in case applicant does not agree with the decision of tax authority, applicant may appeal the decision of tax authority. I would like to draw your attention.
Ibrahimli, we have just a few more 2 minutes. I would like that you.
Yeah, this is the last slide.
Okay.
So I would like to draw your attention to certain special notes. So in case non-resident submits the application of the application stipulated in our slides, tax authority provides the applicant with a notification on receipt of the application. Applicant can check status of his or her application by using notification number. This is available in both online regime by including the notification number. The applicant may check status in which step currently the application, or by calling to the hotline of tax authority. So applications, as I said, are reviewed within 20 business days. However, in case additional time is needed for the investigation of the received documents, this time frame can be extended up to 20 business days. It means overall, in such a case, the overall review will be 40 business days. Here is for special notes with respect to the tax residence certificate. For the purposes of DTA 5 form, this form is for refund of overpaid tax. The tax residence certificate shall cover a period of overpaid taxes. And with respect to DTA form, the certificate tax residence shall be deemed effective for 1 year from date of its issuance. So supporting documents attached to the application forms have to be legalized, apostilled, or notarized. It is worth to note that Azerbaijan is signatory to Apostille Convention. So documents received from contracting states of Apostille Convention are not required to be legalized. So for certain CIS countries, apostillization is not required under Chisinau Convention. So notarized copies of documents issued in those countries are acceptable. So this is the last note is that if supporting documents are issued in a foreign language, their notarized translation into Azerbaijan language shall also be attached to the application form. So it is the last of my presentation.
Mr. Ibrahimli, thank you very much. The information is indeed very helpful. I would like to repeat once again for all listeners of this conference, if you would like to have these slides, please email us and we will make sure that you have them. And if you have any questions and we will not be able to answer all of them, just we'll answer every question via email and we'll make sure that you understood and have all queries solved. I imagine that nowadays many companies are looking to mitigate their tax burden if they have branches or companies in Georgia. So, Sofia, let us know, how may our clients minimize the taxes if they have corporations in Georgia?
Let me introduce, good day everyone, let me introduce myself. I'm Sofia Roinishvili, I'm a partner in GRATA International Georgia, and in my presentation I will address why is a permanent establishment is so important in international taxation. So in Georgia, as soon as a non-resident's presence in Georgia constitutes a permanent establishment, it becomes a taxpayer to Georgian source income. So it starts to pay corporate income tax, it starts to pay Georgian VAT, it becomes a tax agent, means that it carries out all withholding related to non-resident payments and benefits to the employees as well as salaries. For taxation purposes, permanent establishment directly equals to a Georgian resident enterprise. Before switching to another part, I will just review Georgian taxation system with respect of corporate income tax. So we have a so-called Estonian model of taxation. For example, corporate income tax is not a tax which is directly applicable to income. It's actually applicable to the distributed income. For example, in case of an enterprises such as LLC, joint stock company, corporate income tax applicable only to the income which is subject to taxation with dividends, and in case of permanent establishments, it's distributed income, and as well as some kind of gifts, expenses not related to commercial activities. This is the subject of taxation with corporate income tax with case of Georgian resident entities, and in cases also with taxation of permanent establishment. So before switching to a concept and elements of permanent establishment, I will say a few words on the registration process of a permanent establishment in Georgia. Permanent establishment, as a permanent establishment, there is such concept and the Georgian regulations, can be directly registered in the revenue service. Non-residents who is planning to carry out economic activity which may lead to leads to the permanent establishment, they may go directly to the local subsidiary of local department of the state revenue service and carry out the respective registration as a permanent establishment. Registration of a permanent establishment is also possible through incorporating a branch, directly a branch in Georgia. In this case, registration is carried out by the entrepreneur registry. So in case of registration in the entrepreneur registry, no separate registration is required in the state revenue service. It one shop window. So you register in the entrepreneur registry, and it means that you perform tax registration as well, unless you want to be separately registered as a VAT payer. In this case, you will have to go to apply to the revenue service as well. So registration process is quite straightforward. It takes a day, not more, if all relevant documents are ready and sufficient under the respective regulations. All corporate decisions should be authenticated and apostilled, unless we have separate agreements, such as with the countries, such as Minsk Convention. In this case, only notarization will be enough. So this rule is applicable also to the documents prepared in Turkey. Just for the registration, the state fee is 100 Georgian lari. It's about 25 euro, not more. It is possible for paying some extra double amount to pay within the same business day when the application has been submitted. So permanent establishment definition under the tax code of Georgia is in line with best international practice. It's the same as provided under the United Nations Model Convention or OECD Model Convention, and it states that under the tax code of Georgia, the permanent establishment is a fixed place of business through which the economic activity of a non-resident entity or individual wholly or partly is carried out, including the authority activity of the authorized agent. So beside this, following is also constitutes a permanent establishment. This is construction site, installation, construction project, and related controlling activities to this construction site, installations, and construction projects. Installations also and drilling vessels and also is and related controlling activities also constitutes a permanent establishment, and also there is such a concept that as a permanent establishment of a non-resident individual through which this individual carries out his or her economic activity. Also, this is just a simpler place of management, branch, or office. So, as just in Georgia, court practice allowing us to interpret the respective norms under the tax code of Georgia is very limited. It is really hard to find any reliable decision of the Supreme Court of Georgia, which will help you in interpreting the provisions of the tax code of Georgia. That's why while assessing the risk of permanent establishment in Georgia, we mostly refer to OECD Model Convention and formal commentaries to this OECD convention. And beside this, I should mention that Georgia has entered and enforced 56 double tax treaties with 56 countries, and all of them, or most of them, are OECD, not United Nations Model Convention, but an OECD Model Convention. So mostly my presentation will cover elements under the OECD Convention, which just also is reflected in the definition of a permanent establishment under the tax code of Georgia. There are three main I just let me also tell, just refer to the list of the countries Georgia has a double tax treaty. It's almost all EU countries. It's the UK. It's almost CIS countries except Russia and when the client applies to us for some kind of advice, generally we will have to refer mostly to the OECD Convention, double tax treaty as under OECD Convention instead of definition under the tax code of Georgia. Permanent establishment under the standard OECD convention has three main elements. It's existence of a place of business, which might be facility, any kind of facility, any kind of premises, machinery or equipment. The second element is that the place of business must be fixed, established at a distinct place with a certain degree of permanence. And third element is carrying on the business through the fixed place of business. Person is carried out by person dependent on the enterprise, for example, personal, which carries out its activity in the state, in Georgia. Where there is fixed place of business of non-resident enterprises situated. So what does it mean to have a fixed place of business under the model double tax treaty? First of all, there should be a link between the place of business and geographical point. It is possible that activities are moved from one point to another through, though in case if it constitutes a coherent whole commercially and geographically, it directly constitutes a permanent establishment. For example, when it is a large mine, even if it is situated in a place which can be divided geographically, it still constitutes one fixed place of business. This is also applicable to large construction projects as well. So there should be a certain degree of permanence. General attitude is that a fixed place to become a permanent establishment if it exists at least 6 months. And it is also may happen that, for example, business has been started for a limited period of time. For example, some kind of investor or some kind of contractor started its business and it was intended not for the 6 months period, but 3 months. But generally it lasted, instead of 3 months, it's lasted 6 months. What happens in such case? Then in this case, the permanent establishment exists since the moment of inception the business. In this case, we have some kind of retroactive permanence, and permanent establishment actually will become a taxpayer since the moment of starting its business in Georgia. There are also subjective attitudes. For example, it was intended that the business will last and presence will last more than 6 months, and permanent establishment, which will lead to permanent establishment. So in this case, even if the business lasted less than 6 months, intention of non-residents is crucial in this case, and it will still constitute a permanent establishment in Georgia at the moment of inception its activity. And also, it is quite possible that, for example, business lasts just limited period of time, maybe 3 months or 4 months, but generally this non-resident business is has a stronger connection with it's a stronger connection with the country, in this case, Georgia. So it is just directly, exclusively carried out in Georgia. So in this case, we have a permanent establishment as well. Okay. what happens and what is business carried on through. It means that business of non-resident enterprise is carried on through its permanent base, and it's carried out by persons dependent on the enterprise. Mainly these persons are maybe even it is an entrepreneur or a person which has an paid employment relationship with a non-resident entity. And in this case, it has no meaning whether these individuals, these persons, has any representative powers or not. And also it may happen that the company has no individual presence of its employees in Georgia, but it has some kind of automatic equipment which is maintained, set up, and controlled and operated by its employees. So for example, it might be a server of a foreign enterprise, and through this equipment, actually, income is generated in Georgia by the non-resident entity. So in this case, also may lead to the establishment of a permanent establishment in Georgia. There's exclusions, exemptions, a so-called negative list of the activities, which even if the company non-resident has a permanent presence in Georgia, it does not constitute a permanent establishment. It is mainly an activities which have an auxiliary character, which does not constitute the core business for a non-resident. And for example, the facilities held by this non-resident are used for storage, display, and delivery of goods. So, for example, stock maintenance for storage, display, and delivery, purchasing goods, collecting information, scientific research, as well as some kind of advertising activities. So it's a quite common, for example, some pharmaceutical companies, when they have non-commercial presence in the territory of Georgia, which does not constitute a permanent establishment in Georgia, they may have some kind of local employees which income is taxed at the source of payment. However, their activity does not lead to any other taxes such as corporate income tax or VAT, because this is not a core business of the non-resident enterprise, and actually its commercial activity in Georgia is carried out through independent agents such as distributors, for example, and that's why in this case their local source income will not become taxable in Georgia. There is also so-called agency permanent establishment. In this case, there is no necessity to have a fixed place of business in Georgia, but it is enough to have an agent in Georgia, which might be an individual or a company person, as it is defined under the double tax treaty. It should have no independent status. In case this should be addressed in details. What is the independent status of the agent acting on behalf of the non-resident enterprise? So it is the agent is deemed to be independent if it is typically responsible to the principal on fulfillment of its contractual obligations. So there is no significant control from the principal. The independent agent is not subject to detailed instruction from the non-resident entity. And one and most important criterion is that the principal relies on special skills and knowledge of the independent agent. So in case the representative have no independent status, there will be a risk of a permanent establishment in Georgia. So agents can be residents or non-residents of Georgia, and they should act on behalf of an enterprise. So it's differently from the situation when the economic activities carried on through dependent personnel, which it is not necessary to have a representative power. In this case, agency has representative power. It is directly authorized, it has a power of attorney to enter contracts on behalf of a non-resident enterprise. And it also uses this representative power on repeatedly, and not merely in isolated cases. For example, if it was just one agreement which was entered by non-residence agent, it will not directly constitute a permanent establishment. So there will be some permanency in this case, which means that this agent should act repeatedly on behalf of the non-resident enterprise. So it acts in the name of the enterprise, and in this case, which is also very important, negative list exemptions is also applicable. For example, if this agent if this agent activity is not constitute a core activity of enterprise, this will not lead to permanent establishment. For example, the agent may enter some kind of advertising agreement, or it may enter into the agreement, for example, renting the property on behalf of the company, for example, for storing the goods of this non-resident. So in this case, we will definitely have no permanent establishment in Georgia. And which is also very important, it's a construction permanent establishment.
I'd like to interrupt you. We have just 2 minutes left.
Okay, I need only 1 minute, and it will be enough. Thank you. This is construction permanent establishment. This is a building or site or construction or installation project constitutes a permanent establishment only if it lasts more than 12 months. So it is a model convention threshold, but when applying to this regulation, you will have to check each double tax treaty, because this threshold may differ in different double tax treaty. So this 12-month test is applicable to each project individually. For example, if the company have 2 different projects which lasted 6 months plus 6 months, this will not lead to a permanent establishment. This also include activities such activities on site planning and supervision by the non-resident also constitute a permanent establishment. And the actual moment of starting the contract, starting the permanent establishment is the moment when the contractor begins work in Georgia, and the work ends when the work completely or permanently abandoned. So this is all which I wanted to tell you. Thank you for your attention.
The jurisdiction, the country Kazakhstan. Lyazzat, you are live. Please share with us your ideas and information. Thank you.
Again, good day, dear participants. My name is Lyazzat Zhilkibagarova. I'm an associate in GRATA International Kazakhstan. And today, the topic of my presentation is the concept of the beneficial ownership in Kazakhstan. I will tell you how this concept is used both in theory and in practice in Kazakhstan, as well as I highlight just recent amendments which were introduced into this concept recently. The beneficial owner under the Kazakh tax legislation is recognized as a person who has the rights of possession, use, and disposal of the income in question. And at the same time, this person should not act as an intermediary, for instance, like agent or nominee. This triad of rights, the right of possession, use, and disposal, implies the following. The right of possession implies that the person actually possesses the income in question. The right of use implies that the person is able to benefit from the income in question or property in question. And finally, the right of disposal means that the person is entitled to determine the legal fate of the income in question. For instance, the person can sell this property or income. Why the concept of the beneficial ownership is so important for tax issues? The reason is that this concept enables prevention of double tax treaty abuse. I will explain you this abuse on the following examples. In this example, as we can see, an individual, let's assume that he is a resident of China. He owns 100% of shares in the company A. Obviously, this company is a resident of Kazakhstan. And the company A distributes dividends in respect of such shares in address of the individual. Under general rule, the company A, when performing its tax obligations in respect of these dividends, it should apply general withholding tax rate of 15% and withhold it from the amount of dividends paid to the individual. However, considering that the individual is a resident of China and there is a double tax treaty between Kazakhstan and China, the company A may apply the provisions of this treaty, and instead of 15% withholding tax, the company A is entitled to apply 10% withholding tax, reduced rate. However, the condition is that the individual answers the definition of the beneficial owner, which is definitely the case in this example because the individual does not act as an intermediary, and it definitely has the right of possession, use, and disposal in respect of these dividends. Hence, it can be recognized as he can be recognized as a beneficial owner, and the company A is entitled to apply the double tax treaty provisions. However, if we interpose another company between the company A and the individual, for instance, the company B, let's assume that this company is a resident of Netherlands, and instead of the individual, this company owns 100% of shares in the company A, and the company A in its turn distributes dividends in address of the company B. However, unlike the first scenario, here the company B does not keep these dividends. On the contrary, it transmits it further to its own sole shareholder, the individual from China. And in this case, if the company A would like to apply the double tax treaty between Kazakhstan and Netherlands, as the company B is a resident of Netherlands, the company B will not be allowed to do so because the company B does not answer the definition of the beneficial owner. It does not possess use and dispose in respect of these dividends, and it merely transmits these dividends further to the actual beneficial owner, which is the individual from China. And in this case, the company B will be obliged to apply general 15% withholding tax rate instead of 5% withholding tax rate, which is envisaged by the double tax treaty with Netherlands. Obviously, the individual and the company A decided to interpose the company B in this scheme in order to apply more beneficial conditions of the double tax treaty with Netherlands, because the double tax treaty with China, which should have been applied in this case if there were no company B, this double tax treaty provides for 10% withholding tax rate, but the double tax treaty with Netherlands provides for withholding tax rate of 5%, which is half less than the previous rate. And in order to prevent such practices, the beneficial ownership test is applied in the tax issues. However, these examples are rather simple because in practice they can be more sophisticated. For instance, like the real case of the GRATA company, which was quite recently heard in the framework of the investment disputes by the court in Nur-Sultan, our capital city. Here, the Kazakh company has a shareholder from Netherlands, and this shareholder doesn't have a bank account in the Kazakh currency, it is tenge. Hence, when the GRATA company distributed the dividends in address of its shareholder, the shareholder requested to deposit these dividends on the bank account of the other company, which is the recipient company in this case. The recipient company just converted these dividends from Kazakh currency tenge to euro and transmitted the full amount of these dividends to the beneficiary company. Then the Kazakh company, when performing its tax agent's obligations, applied a reduced withholding tax rate of 5%, which is envisaged by the double tax treaty with Netherlands, as the shareholder is a resident of Netherlands. However, the Kazakh tax authorities challenged such application on the following grounds. There are two main arguments of the tax authorities in this regard. First is that the recipient company cannot be recognized as the beneficial owner, and second, that there was insufficient evidence of the beneficial ownership status of the shareholder. However, the taxpayer, the Kazakh company, rebutted these claims on the following grounds. First of all, there is no such requirement under the Kazakh tax law that the recipient company should be the beneficial owner of the income, because the beneficial ownership concept was introduced so that the beneficial owner would be the person who applies the double tax treaty benefits, but not the recipient company. Hence, the Kazakh tax authorities' arguments might have been reasonable if it would have been the recipient company which applied for the double tax treaty benefits, but it was not the case in this situation. And regarding the second argument, the taxpayer presented an extensive amount of evidence that the shareholder was a beneficial owner. This evidence was the decisions of the board on distribution of dividends in address of the shareholder, the payment orders which proved that the full amount of dividends was transmitted to the shareholder. Then the shareholder provided a letter from the tax authorities of Netherlands which confirmed that the shareholder included the received dividends in its own taxable income. In other words, there were extensive amount of evidence that the beneficiary company, the shareholder, had the rights of possession, use, and disposal in respect of the dividends in question, and this shareholder didn't act as the intermediary, an agent or a nominee. As a result, the court of Nur-Sultan issued a decision in favor of the Kazakh company, practically on the same grounds which the Kazakh company used as its arguments. But the tax authorities then appealed this decision in the appeal instance, however, unsuccessfully, because the appeal instance upheld the decision of the first instance court. And for now, the tax authorities has an opportunity to appeal both decisions of the first and the appeal instance courts in the Supreme Court. However, as of today, they didn't do that. And so one might say that for today, Kazakh taxpayers might have favorable precedent if they're faced with the same claims from the Kazakh tax authorities. And as a concluding note, I would like to mention recent amendments which were introduced into the concept of the beneficial ownership recently. I would like to note that these amendments concern mainly active income rather than passive one, which was the main subject of my presentation. And most of these amendments are retrospective, which means that if the Kazakh tax authorities pose their claims now in respect of the transaction which took place in the previous 3 years, the Kazakh tax authorities will apply these amendments, even though they were not in effect at that time, because these amendments improve the position of the taxpayer. Thus, before the 1st January 2018, the beneficial ownership test in respect of the active income was applied in the so-called unlimited and unconditional manner. But effective 1st January 2018 and until the beginning of this year, this concept will be applied only in respect of the related persons. For instance, if a Kazakh company purchases services from the foreign company which is unrelated to it, and the Kazakh company intends to apply the double tax treaty provision, it is full tax exemption, the Kazakh company will not be obliged to make sure that this foreign company is a beneficial owner of the income, because these companies are unrelated. And the same situation will be even if this transaction takes place this year, and there is no MLI agreement between Kazakhstan and the state of the foreign company. As a quick note, I would like to mention that MLI is a multilateral convention which enables swift enforcement of the base erosion and profit shifting measures in the number of double tax treaties, instead of separate negotiations of each and every double tax treaty. And if there is an agreement between Kazakhstan and the state of the foreign company to apply MLI provisions, the Kazakh company will be obliged to perform the beneficial ownership test only in case it pays income to the related person, for instance, its parent company. And moreover, this person would be, the company would be obliged to make sure that the foreign company is not only the beneficial owner of the income in question, but that the income which the Kazakh company paid in address of the foreign company was taxed at the state of the foreign company at a nominal rate of 15%. The legislator explained this amendment on the grounds that multilateral companies tend to abuse the double tax treaties provisions, hence more stricter measures were required in order to prevent such abuse. And in view of this, this new requirement is introduced. However, I'd like to mention that if the Kazakh company has a transaction with a foreign company which is completely unrelated, and there is an MLI agreement between Kazakhstan and the state of this foreign company, the Kazakh company will not be obliged to make sure that the foreign company is the beneficial owner, or that it taxed the received income in its own state at the nominal 15% rate. And on this note, I would like to conclude my presentation. Thank you for your attention. If you have any questions, I will answer them in the Q&A session, which will be held in the end of this webinar. Thank you very much.
And I have a straightforward question. Do you have in Kazakhstan this concept of letter of acceptance when you sign with the tax authority?
A letter of acceptance?
It means that when a corporation comes first time in your country, and they don't know exactly how to make the right tax planning, they ask for a letter from the tax office. Tax office accept this, and then you don't have issues in the court. Do you have this concept
yes,
in
we
your
have
country?
some kind of this, but it's called a clarification, and it's not binding. And so the Kazakh tax authorities, yeah, and the Kazakh tax authorities might reconsider it anytime. And yeah, it's not so useful.
Yeah, I know. But in European countries like Luxembourg, when I have such a letter of acceptance, of course, they are subject of interpretation, but anyway, you can plan in advance to not have such bad experience with local courts.
Yeah, it's quite useful, but we don't have it.
Yeah. Okay, so now we will switch to my presentation. Okay, I prepared a presentation which will cover, first of all, in general, the comments on treaties and to see what are the typical general treaty problems in every country based on international bodies, model convention like OECD, UN, and US. And then we'll switch to the taxation in Moldova to see in particular every tax and how this is used in Moldova and what are the impact of double tax treaties on applying those taxes. So I would like to mention that in general, double tax treaties, they have a few objectives. First of all, to prevent double taxation and to allocate exactly what is the right of income. Actually, there are three types of main problems which arise in the treaties. That's why it's very important to that the treaty covers these problems. So first of all is the conflict of residence, then is the conflict of source of income, and sometimes you have three kinds, you have both of them, conflict of residence and of source. The relation between domestic law and treaties. Usually treaty needs to be transposed into national law. Sometimes in some jurisdictions there is a so-called treaty overrides. There is a case pending at German Constitutional Court right now. The double tax treaty can only restrict national law, but not enhance domestic tax rules. Of course, we have also protocols, part of the treaty, and we have a few models in general, like OECD, the Organization for Economic Cooperation and Development. We have UN model and US model. For Moldova, there is model treaty OECD applied. The interpretation of the treaties, it is quite of huge importance in case when you come to some conflicts with the state where you have your company. And when we have such problems, we need to look in the commentary OECD model treaty and to find answers if we don't find in the proper treaty. And afterwards, we need to look also in the national law of applying the state, in our case, Moldova. There are also anti-abuse provisions. Quite all states apply for anti-abuse provisions with regard to treaty. Domestic law may also provide for some special anti-treaty shopping provision, like was explained by my colleagues earlier regarding the ultimate beneficial owner and using other jurisdictions for taking dividends and paying less withholding tax. That's why in the general, in the domestic law, we may have some provision. The typical concept of a typical tax treaty is scope of the treaty, definitions, allocation of income. We have also the which system is applied. For example, in Moldova, we have credit method. I'll explain later how this works. And the exchange of information between countries. In the following slides, I will comment on the few articles which are in the model OECD treaty. And you can find the same, as we have about 50 double tax treaties signed with different countries. we cannot go through every treaty signed by Moldova, so that's why we decided to inform you what are the main treaty provisions, which are quite the same for all treaties signed with Moldova. You will find in Article 6 what means source state and when does it has unlimited right of taxation, business profits. Source state has no right of taxation unless the income can be attributed to a permanent establishment. So that's why it's very important to look in the Moldovan tax code and find what means permanent establishment and what means place of effective management. Then we have dividends. The source state has limited right of taxation is 5% with many countries of gross dividends. If shareholder is a corporation holding directly at least 25% of the shares in the distributing entity. And then we have also, we have also 15% in other cases than the case outlined above. State of residency grants tax credit, and source state has unlimited right of taxation if dividends can be attributed to the permanent establishment of the company in the source state. Here is an example how the right of source state to withhold taxes depends on shareholder and participation rates. Let's assume that we have a company resident in Germany and has in Moldova 3 other subsidiaries. And in corporation A, the German company holds 20%, in B holds 40%, and in C another 40%. Then, according to Moldova legislation, will apply the company which holds more than 25, respectively for company B and C, and not for company A. We have also the interest. Source state has limited right of taxation, 10% of gross interest. State of residency grants tax credit. Source state has unlimited right of taxation if interest can be attributed to the parent establishment. It's quite the same as I explained above with other kind of incomes. We have royalties, capital gains, income from employment. And here is important to mention that the state where the employee exercises activity, so the source state has the right of taxation, unless the employee is in the state for less than 183 days. What are the typical treaty problems? And here I may explain from our experience. Treaty actually grants benefits to residents only within the meaning of the treaty. So an individual is resident in a state if she is taxed by this state due to his or her residency. Residency generally means place to live. A person can be resident in several states according to the relevant domestic law. And in such case, tiebreaker rule applies also in Moldova, where is the center of vital interests to determine the residency of this natural person. For corporations, treaty grants benefits to resident corporations only. So if the company is resident in Moldova, then will benefit from the reliefs of the treaties. A corporation is resident in a state if it's taxed by this state to its residency. Residence under domestic law generally means place of statutory seat or place of effective management. A corporation can be resident in 2 states according to the relevant domestic law, and the same tiebreaker rule will apply like for individuals. The partnerships are treated like corporations. It's the same for Moldova, and it depends on the country with which is signed this treaty. The partnership rely also upon the treaty on benefits. In Moldova, we have, as I explained above, we have the credit method to avoid double taxation. And here is an example of, let's say that the taxable income in Moldova for a corporation is 100,000 euro or any other kind of lei and so on. And in Germany, the company has 10,000 euro. Then if assuming that all kinds of taxes for Moldova are 40%, and in Germany we have 30, then taxes on foreign source income will be 4,000. So from the foreign source, yeah, and we will credit the amount which is paid in Germany, 3,000. So therefore, the taxes to be paid will be 35,000. This is an example of how the credit method is applied. But an important factor related to this method is that the claimed amount of money cannot be higher than the amount that could have been resulted after taxing the same amount of income in a resident country. I explained above about dividends, interest, and royalties according to the OECD model treaty. And here we have, on the left side, we have countries with whom Moldova signed double tax treaties. And here are dividends, interest, and royalties, depending on the country. Let's assume Belgium. So we have for royalties, we have 0 tax. For interest, we have 15. And for dividends, 15. There are more favorable jurisdictions like Cyprus. So we have, by the way, you should look at first number, because the second one is the change in legislation which occurs last year. So now we have 5% preferential tax on dividends, we have 5 on interest, and 5 on royalties. So if we imagine that a corporation residing in Cyprus, a health company, has subsidiaries in Moldova, then the royalties paid up to the holdco will be imposed only with 5% on royalties. And if we have, let's say, loan agreement, then will be paid interest from interest only 5%, and when you pay dividends also 5%. So in choosing the right jurisdictions and in tax planning, it is important to see and know all these double tax treaties to benefit properly. Of course, we should mention that the anti-abuse rules applies, like shopping provisions, arm's length rules, and others. So we have here the list of all countries. You will have this presentation in your hands after the conference, so you'll be able to look at every country and what are the taxes for them. Yeah. So, Of course, in the treaties, we have the tax information exchange, which means that Moldova must provide lists with the taxpayers to the willing partners, and vice versa. We receive this type of information from other countries on the residents registered in Moldova, or foreign residents registered in Moldova. If an entity wants to claim a refund, he must bring a certificate of residence in another country and proof that the taxes are already paid in the country where the business takes place. Now we'll switch to the exact figures about taxation in Moldova. So in general, we have so the resident and non-resident are obliged to make and receive payments involving foreign currency operations. There are certain limitations on these payments, especially with cash and loan agreements. They should be registered, for example, with the National Bank of Moldova. We have the general national accounting standards, but there are some mandatory cases when the companies are obliged to use International Financial Reporting Standards, IFRS. And you will find here the cases when this is necessary and is binding. Regarding residence, so a corporation, I explained above how the model treaty works. And now in concrete, regarding the Moldovan situation, a corporation is resident if it is established or managed in Moldova. Residents are taxed on their worldwide income. Non-residents are taxed only on income derived from certain Moldovan sources. Taxable income is based on the accounting income for the year as adjusted for tax purposes. We need to understand that we have income for financial purposes, we have for tax purposes. So it is very important how you register those operations in your accounting system and report them. Taxation of dividends. Dividends received by a Moldovan resident company from another Moldovan company are not taxed at the level of the recipient. And we have capital gains of companies, which are taxed, of course, but only 20% of the gain. Losses, corporate tax losses may be carried forward for 5 years. The carryback of losses is not permitted. So if a company implements the accrual method of accounting and has losses in, for example, 2021, they may carry forward for the next 5 years and offset regarding to the taxation and, of course, pay less taxes. The rate in general is 12%. What else we have? We have foreign tax credit. Resident taxpayers are entitled to a tax credit to the tax paid on foreign income. The credit is limited to the amount as I explained above. Okay. Yeah, we have also some tax incentives regarding the companies which open their business in IT technology parks. We have IT park in Moldova. We have free economic zones, which is overall tax is 7%, for example, for IT park. And in the free economic zone, we have many incentives, but this is the subject of another presentation. Dividends in general are 6%. For interest paid to a non-resident is subject to a 12% withholding tax. Of course, as I explained above, depending on the country with whom Moldova signed the agreement, if in the agreements, in the treaties indicated less then the reduced tax will be paid. For example, if I remember, for Cyprus or for Netherlands. Yeah. So we have other taxes on corporations like health insurance contribution, pension fund contribution. And here it's important to mention that until now, the employee paid 6% of the salary for the pension fund, but starting with this year, beginning of the year, the social insurance is calculated to the amount of salaries and rewards, which is due in total amount by the employer. So we have also real property tax, stamp duty, transfer tax. You will be able to see all of them. Transfer pricing is an important topic. Actually, we don't have a specific pricing legislation in Moldova. Also, the tax code provides that the arm's length principle should be applied to transactions with related parties, and losses incurred on transactions between related parties are not deductible for corporate tax purposes. There is also a thin capitalization concept. The deduction of interest on borrowings received from individuals and legal entities other than financial institutions and microfinancing organization is allowed only within the limit of the average weighted rate set by the National Bank of Moldova. So on the website of National Bank of Moldova, they set every year the weighted rate, and we need to apply the same rate if we make loans between entities, of course, other than leasing companies and banks. Tax year is a calendar year, but you can apply for changing the tax year in correspondence with the hold company or in a multinational group, a mother company. Consolidated returns are not permitted. Each company must file its hour return. We have, like maybe in every country, the filing requirements till 25th day of the third month following the end of the next tax year. And rulings, it is also important, as we discussed about with my colleagues from Kazakhstan. The taxpayer may request a comfort letter or letter of acceptance, are different names in different countries. Why is it important to have such a comfort letter before you begin any operations in Moldova? Because you can budget exactly what are the costs for taxes for this country, and you may avoid a lot of litigation and disputes in the courts later on. So what this means, in simple words, assuming a company comes to Moldova to establish a factory, the company is owned by a hold company from outside with more than 25% in shares. So, and this Moldovan subsidiary is not sure what is the exact rate for withholding tax or royalties. So the company will file a letter to the tax office in Moldova and will pay a fee for issuing this letter, which is 60,000 lei, is about 3,000 euro, if I'm not mistaken. Yeah, about 3,000 euro. And the tax office will answer in writing what is their position regarding the questions the taxpayer has and how the tax office apply the double tax treaty with the countries from where the corporation is coming. So my advice to you is always try to apply for these comfort letters before you even make your business plan to come to Moldova in a feasibility stage. Personal taxation on individuals is quite the same like in a model OECD treaty. Also residents more than 183 days. Each individual has an obligation to pay income, must file a return. The joint returns are not permitted, so everybody should file this declaration alone. Taxable income represents the gross income obtained from all sources during the tax period, reduced by the deductions and allowances permitted by law. There is a lot of natural person coming from different countries in Moldova who, for example, is doing some IT work, sitting in an apartment in Chisinau and providing services for foreign companies. So it is important to understand that this natural person should report all his incomes and should find out where is his residency, does he stay more than 183 days in the country, what is the sourcing of income, in order to establish how much taxes he should pay. But anyway, for individuals who are registered with, for example, with Moldovan IT Park, they pay a reduced tax and make a lot of sense to get registered with this company, which provides these tax incentives. Capital gains on individuals are treated as ordinary income, but only 20% of the gain is taxable. So if a natural person has a capital gain of 100,000 euro, then will be taxed only 20,000. Deductions and allowances. These allowances are available, like in every country, for spouse, children, and dependents. The rate is 12%. Another issue which is important, the resident individuals carrying out trade activities without being organized under legal form, LTD or another company, and whose income will exceed 600,000 lei, they are liable for 12%, which is less than is only 1%. There is also real property tax, like in the case of corporations. We have a very small net wealth tax. In comparison with other European countries, there is only 0.8% wealth tax on individuals which own real estate in Moldova. And this should be estimated at least 1.5 million lei and at least 120 square meters. The calendar year is the same for individuals. Filing is due on 30 April of the subsequent fiscal year. And of course, we have penalties for every kind of late filing, for failure to file, or avoidance or tax evasion. We have also VAT on goods. General VAT standard rate is 20%. We have 8%, which applies to certain food and products. International transportation and exports are exempt with credit, like I explained above. Some services like financial services, postal, cars are exempted from VAT and with no right to deduct. The registration for VAT purposes is mandatory when the business has taxable services or taxable supplies and imports in excess of 1.2 million. Of course, there is a voluntary registration if the company wants to get registered before achieving this amount of turnover. VAT payers must prepare and submit VAT returns on a monthly basis, and the filing must be carried out not later than 25th day of the following month. So this is quite all. I would like just to add at the end of this presentation that we in Moldova have enough experience in dealing with international taxation, and it is very important to understand that the scope and the goals of tax advisors are to avoid double taxation, but not avoid paying taxes. And the tax advisors should look for minimization of global tax risks for their clients, and to have a sustainable tax planning in place with comfort letters, with right interpretation of the treaties, of domestic law, and to prevent any problems which may arise in the future for those clients.
Hello, everyone.
Hi.
Hello, good afternoon. Can you see the presentation?
Yes, just make it the full screen.
Is it full screen now?
Yes.
Okay. Okay. So first of all, my name is Buyanjargal, an associate from the Mongolian office of GRATA International. Today I'm going to give you a short insight into double taxation in Mongolia. And within this topic, I'll give general information on double tax treaty and structure of a typical double tax treaty in Mongolia, and the treaties that are in force in Mongolia, and the tax rates under the treaty, and also information on the actions to take when there's a potential double taxation, and practical application of the double tax treaty. So our colleague already gave information on the double taxation treaty. I will just skip this part. However, the double taxation treaty is titled as an agreement between the government of Mongolia and the government of certain country for avoidance of double taxation and prevention of fiscal evasion with respect to taxes on income and on capital. And the double tax treaties of Mongolia are based on model tax conventions by the OECD and the United Nations, just like the other countries. Also, these are the main objectives of double tax treaties. Our colleague already explained, so I guess I have to skip this part. And this is a structure of a typical double tax treaty in of Mongolia, and this usually contains 8 to 9 chapters, including covering these issues. The agreement covers resident of one or both of the contracting states, and from Mongolia, the tax treaties cover income taxes and property taxes. And the definitions part gives a general definition and specific definition on the person, company, permanent establishment, and etc. And for the 3rd and 4th chapter, the incomes and capital that are subject to taxes in Mongolia and the other country, the other contracting state is defined. For example, the income derived by immovable property situated in Mongolia shall be subject to Mongolian taxation, and also the business profits earned by permanent establishment of foreign legal entity, and also dividends and interests and royalties paid to resident of other contracting states are also subject to Mongolian taxation. And for the methods For eliminating double taxation, Mongolia also uses credit method, and also our colleague already explained the credit method and gave a really good example of it. And for the special provisions, this part obliges the contracting states not to discriminate non-residents and foreign nationals. And also here is the procedure, mutual agreement procedure is also regulated in this chapter. And for example, if you consider that the action of Mongolia result or will result for you not in accordance with this double tax treaty, you can submit your request to relevant authorities of Mongolia in order to eliminate such double taxation. And I will give more specific information in the following part. And for the entry into force, the international treaties become effective as domestic legislation upon the entry into force of the laws on their ratification by the Parliament of Mongolia. And for the treaties in force in Mongolia, Mongolia has signed tax treaties actively between 1991 and 2004, as shown here. And as of 2021, there are 26 double tax treaties in force. As we can see, we have treaties with China, Hungary, Belgium, France, Kazakhstan, Singapore, Italy, etc. And for the rates, tax rates under the double tax treaties, before this, I'd like to give you short information on the tax rates under the laws of Mongolia. For the dividend, interest, and royalties and other payments made to the non-residents are subject to withholding tax at 20%. And as we can see here, under the double tax treaties, the rates are usually between 5% to 15%. And some countries set the rate differently and depending on what types of income it is. For example, for the interest rate, in case of Singapore, it is 5% for interest paid to financial institutes, and also it's 7% under the agreement with the Great Britain. And also for the dividend, in case of Belgium, it's at 5% for dividends in case of the beneficial owner who holds more than 10% of the company paying the dividend is 5%, and in other cases it is 10%. And for royalties, it is also sometimes set differently depending on what kind of right it is. For example, in the Austrian case, it is 5% for patents and trademarks and etc. And for the technical fee, only these 7 countries set the tax rate for technical fees. And as I mentioned earlier, we have 26 double tax treaties in force as of today. And 4 double tax treaties with United Arab Emirates and Kuwait, Luxembourg, and Netherlands were terminated unilaterally due to loss of significant amount of tax revenue. As you can see, shown in the presentation, the tax rates under the treaties are usually 0% or 5%, which is a critically low, and also technical fees are exempted from taxation. And and this chart shows the importance of double tax treaty for foreign investment. If you look at the chart, the three most invested countries into Mongolia were Canada, China, and Singapore, which are the countries to which Mongolia has a double tax treaty. And the next thing is what should you do when there is a potential double taxation? First of all, you can file a complaint to this competent authorities of Mongolia with regard to your issues. But prior to this, you may also consult with authorized person of Mongolia to ensure that your request is reasonable and formality requirements are met, to make sure that the formality requirements are met. And this probably helps you to save your time. And also these documents shown here are required for filing a request. And we have a more detailed alert published on our website, so you can visit and find more detailed information. And for the practical application, legal entities are obliged to deduct withholding taxes from incomes generated in Mongolia. However, they tend not to deduct, and as a result, they face tax burdens. For example, in this case, the Mongolian bank A, the bank issued bond on the Singaporean stock exchange, and the bank paid bond interests to this stock exchange. Also, an English bank was also involved in this, and the Mongolian bank paid a brokerage fee to this bank. Also, the bank also took loan from an Austrian bank and paid also the loan interest. And as practically, as usual, the bank didn't deduct the withholding taxes from these incomes, and the tax inspectors reimposed 20% of withholding tax, which is a standard rate under the laws of Mongolia, along with fine and penalty. And also the inspectors also imposed extra taxes and penalty for deducting these incomes from their taxable income. And of course, the bank appealed to Tax Dispute Settlement Council, which is the preliminary procedure in administrative law of Mongolia. And the council decided that the tax inspectors disregarded the provisions of double tax treaties. If we look at the tax rates under the Singapore and Mongolian treaties, it is 5% for interest, and also it was 10% for interest under the agreement with the Great Britain and Austria, and the tax inspectors imposed the tax wrong, and the council, however, the council corrected this inappropriate taxation. So although the tax inspectors tend to disregard the double tax treaties and lack of using the double tax treaties, the upper level dispute resolution bodies they correct such inappropriate taxations in accordance with the domestic laws and the double tax treaties. So I would suggest that the legal entities to pay the tax properly in order to prevent from this reimposing of tax and the fine and penalties. So thank you for paying attention, and this is the end of my presentation. Thank you.
Thank you very much, Tungalag. So we finished with all presentations, and now we are switching to the Q&A session. We have some questions here for some countries. There is a first question for Royal. Royal, are you here? Can I ask these questions?
Yeah. Sure.
The question, I will ask you the following questions. So somebody has a tax certificate which is required for EU company from Netherlands, and it seems that they have a tax certificate issued by the Chamber of Commerce which proves the residency, and he asked, is this enough or should be met other requirements?
Yeah, I know what is meant. Unfortunately, extract from Chamber of Commerce and tax residence certificate are different documents. So if non-resident submits Chamber of Commerce extract instead of tax residence certificate, so tax authority will not accept this extract as a proof of tax residency. So Netherlands company should apply to its competent tax authority to get a certificate of residency. So it is a simple document which should include some information about the company, and the certificate should include information that this certificate issued under double tax treaty, under Article 4 of double tax treaty between Azerbaijan and the Netherlands, and the term of certificate. For example, the certificate covers proves the residency is in 2020, and the last information, the tax residency is submitted for the purpose of use in the Republic of Azerbaijan. So if the document contains such information, it is sufficient for our tax authority to receive as a tax residence certificate. So I know I have witnessed it in my practice, similar cases. European companies submitted extract from Chamber of Commerce, but our tax authority does not accept such extract as a proof of tax residence. I think Netherlands there is an Office of Tax Administration called Dienst Lang. Belastingdienst, I think the Netherlands company should easily get that certificate.
Yeah, you are right. Yeah, I also looked in between, and there is a website on internet where you can So if the listener is with us, just Google it and you will find, you have in your tax office, Netherlands, there is in English and in Netherlands language. And you can apply, you can do it online. It is very easy and they will send your address when you live in Netherlands.
Just a few information which I stated about the tax treaty between the Netherlands and Azerbaijan and tax residency period and to which country the certificate is addressed.
Exactly.
And apostolization also. Netherlands and Azerbaijan are signatory to Apostille Convention. Apostille is sufficient.
No. So if the listener has additional information, he can write and we will help him. So the next question is, I believe, is for Sofia. Sofia, there is a question. Georgia promotes working from Georgia during COVID times and new era of working remotely and living wherever convenient and not expensive. And the question is, if one works in Georgia without any business in Georgia itself, but is based as employee of foreign company, could it trigger this parent establishment if this person concludes deals in other, not Georgia, countries, clients, while sitting in apartment in Georgia and living there as person? Is exactly what I meant in my presentation. Sofia, how is in Georgia in these cases?
It depends the permanent establishment for whom. As I understand, it's a permanent establishment for the company for whom this individual works. So actually, as this company has no core business, no business at all in Georgia, there will be no permanent establishment at all, and there is no risk. Also, it should be noted that it might, most probably there will not be any tax obligations for this person arriving in Georgia, even if he or she becomes a resident in Georgia, because individual residents in Georgia are not taxed to non-Georgian source income. So I don't see any tax risks in this situation at all for the individual or for the company at all.
Sofia, may I ask a question from my side? Is there any threshold of incomes for the natural person they're making in Georgia under which they should declare or have a corporate form? For example, in Moldova, we have an amount. If you make an amount of money per year, then you are obliged to pay so many taxes as a natural person, not as a corporation.
Right. There is a certain threshold which is applicable to the property tax of individuals. For example, if it is more than 40,000 lari, the person should submit annual declaration for the property located.
Okay.
So that's all. Other thresholds are not provided by the tax code of Georgia. So only for property tax purposes.
Okay. Yeah, it's quite clear. If the listener has additional questions, please come back to us. And there is another question for Lyazzat from Kazakhstan. The question is, when we have a branch which pays taxes or financing whole company, I believe it means. It is in Russian, let's just translate. И в Казахстане представительство платит налог на доходы с полученного финансирования от головной компании. Shall we English or in Russian? I believe in Russian because the listener will understand better.
Yeah, I'll answer first in Russian and then I will translate my answer into English so that all participants will understand. Итак, по-русски. Согласно казахстанскому законодательству, и представительство, и филиал не являются самостоятельными юридическими лицами. Они являются структурными подразделениями юридического лица, которое их создало. Соответственно, финансирование, которое предоставляется головным офисом в адрес такого представительства или филиала, не признается налоговым событием, а признается внутрикорпоративным переводом. Так что налогообложение в данном случае не возникает. Now I switch on to English. The question was whether the representative office shall tax the amount of financing it receives from its head company. And I would like to mention that pursuant to the GRATA legislation, neither branch nor the representative office are recognized as separate legal entities. They're recognized as a structural subdivisions of the legal entity which created them. Hence, if the head office finances its representative office or the branch, this branch or representative office are not obliged to levy tax in respect of this financing. It's recognized as an inner-corporate transfer of money. I hope this answers the question which was posed.
Yeah, hopefully there is very, I mean, it's clear with the answer. Thank you very much, Lyazzat. So do you have any other questions? So I don't see for these jurisdictions, there is a question regarding Uzbekistan, and maybe this will answer our colleague from Uzbekistan in writing via email, because he's not live anymore. Okay, if we don't have any other questions, I would like to, by the end of this presentation, to thank you all colleagues from all jurisdictions for your time and efforts to prepare this presentation. I'm sure that we brought a little bit of value for the listeners, and hopefully we will be able to do this in the future. Just a few words regarding international taxation once again. So it is very important to understand where you should find information regarding the interpretation of treaties. And if you don't find, or if you don't understand how the treaties applies in those countries, or if you are not able to read them, then feel free to reach us at GRATA International. We are happy to help you with all queries which you might have. And please consider that international taxation is a very important topic, especially during these pandemic times of COVID, because if you make a proper tax planning, then you can finance your company internally without the need of getting loans from banks or from other mezzanine funds, because mitigating the taxes or avoiding double taxation, it is also a source of potential finance for your company. And in the first stage and in the second stage, you will avoid any kind of risks for potential disputes or litigation in court by addressing these questions beforehand to our team of advisors. So thank you very much. Have a nice day and keep in touch.